No, it did not. I recorded that night. I was watching gold climb and climb and climb and climb. Got up to, I was watching it on goldprice.com. Price got to 1611.32 per ounce. It immediately retreated, and it's been retreating ever since. Can't understand it. Don't need to understand it. Just know that that's exactly what happened. So, is that what you saw happen, Chris? Or
Yeah, in fact, if you want, we can dig into that on our call today. It'd probably be a good topic.
I think it would be an excellent topic. And
I'm hearing a bunch of folks. I'm sure you've heard the same speculating. I'm hearing rumors about the LBMA. Interestingly, apparently, I continue to hear that England is taking this investigation into the metals more seriously. I know you're not a Maguire fan, although my understanding is that the guy who was just named the head of the Bank of England has been sitting there talking to him, learning about gold and silver manipulation for the last 6 months. And I am also told that they are studying my Bart Chilton interview.
I'm not surprised at all about that, because it was an incredible interview, and it was the last interview that he will ever do. I mean, that's a big deal.
Yeah, actually was doing the book is just about done. I'm finishing like for each there's 15 interviews, so for each guy I'm doing a bio about like a page or so. Finished the intro, needs a little editing, but like I got a thank you page. We're getting someone to do the cover. Because apparently what sells the book is the cover, I'm told. So
I thought we weren't supposed to judge books by their cover.
Well,
apparently we are.
That's there's what we're supposed to do and the way life works. But yeah, I feel I'm excited to get it out. It'd be nice to have it done, certainly.
All right.
But anyway, it's all coming along, and can't wait to get you a copy. Think you'll dig it, and
I'm sure of that. Yeah,
I think it'll be especially cool if I get the thing out there where silver below $20, and then silver hits $50 one day. Hopefully I'll.
We're going to talk about silver here in just a second and where it's going, but right now I just want to say howdy, folks. Welcome to the Daily Coin. Got Chris Marcus on the line. He's with Arcadia Economics, and as you just heard, he's wrapping up his book, and he's got some. We're not exactly sure of the exact date, but it's going to be coming out hopefully by summer. Is that right, Chris? Somewhere around summertime? Hopefully.
No, my friend. I'm hoping for February. I feel pretty good about February. I've learned doing a book is kind of like waiting for the leverage in the precious metals market to get overwhelmed. It takes a little longer than you expect, although, I think it's a really important time and really want to get this information out there so people can at least have it. Not my goal to tell anyone to buy gold or silver, but at least want to explain why I think it can be helpful and why there is so much importance to that situation.
Couldn't agree with you more. I mean, that's neither one of us are financial advisors, so we're not going to be offering any financial advice, but we are going to talk about what we do and what we see and how we see it. And one of the things that just happened, Chris, we were talking about it before I hit the record button, is the situation that's happened in Iran. And, gold shot up to 1611 is the number that I recorded. And silver hit like 1854, something, I believe that was what it was, 1854, 1853, somewhere in that neighborhood. And
I don't think it got even a bit higher than that.
No, I think you are absolutely right. It did. It got up to almost 1870, I believe. Is that right?
Yeah, it's 1870, 1880-ish. And interesting to see the volatility picking up, and we can get into a little bit why that might be happening as well.
Well, why is that happening?
Well, I'm going to be careful of how I phrase this because I certainly understand when people get frustrated hearing, well, this is going to happen tomorrow or next month, and I don't have the information to say that yet. Gee, my radar sure is raised. I've been hearing from some folks that are closer to the LBMA that I am that don't often say things like that, hearing that things are getting kind of tight there. And you would think so when you have these repo lines that continue to go on. I think, geez, since September, looks like the Fed has added almost 400 billion to its balance sheet. Correct me if my numbers are off a little bit, but I know it's somewhere in that ballpark. Amazingly, has not even. I mean, you would think maybe that would at least be enough to solve the problem. Has not been the case, and you wonder if we're getting closer to the point where some of this just finally breaks in a more overt manner, like we saw in 2008. Another thing we've seen is the open interest really skyrocket for both gold and silver. And, again, we've learned over the past decade that because I think what we're really pricing here, we're not pricing, is silver supply going to go up or is, demand moving a little bit. To me, what we're pricing is what are the ways that the game can change. We saw in 1980 and in 2011, they raised margin requirements. Interesting, Rory, I'm sure you saw yesterday, they did raise the gold and silver margin requirements again, which is fascinating to me. I guess you could construct a logical argument that you raise them when things are getting volatile, although I don't like the idea of that. The pause in there? Or?
No, go. Keep going.
To me, the idea that you change the rules of the game in the middle of the game. So there's stuff happening, and I'll phrase it like this: that I'm eyeing 2020. Can I guarantee that we see an overrun of the manipulation this year? No, but at least when I look at things on a probability basis and having a background as an option trader, I'm starting to take some flyers on a big move at some point this year. We'll see if that plays out. Again, by all means, I want to be clear. I'm not telling you silver's going to $50 tomorrow. Although, when you think about all the leverage that's been piled on and how this ultimately has to play out, certainly a lot to suggest we're getting pretty close.
I would say that, and I've been saying since December 2017, that this year is going to be a lot different. And it's already started out confirming that whole idea. I, like you, am not saying that gold or silver are going to the moon. What I am saying and have been saying, been on record, so like I said, since December of 2017, that this year everything is going to change. And as it continues to change, the metals are going a lot higher than what anybody expects, than what anybody has been looking at, and that things are going to be a lot different from this point forward. And we saw some massive changes in 2019. All of those changes created the new margin situation that you were just talking about. And the only reason that the COMEX does that is to make it more difficult for people to play in their casino. If you're going to play, then you got to pay. And that's just the bottom line. It has nothing to do with market volatility, up or down, any of that nonsense. They want to keep people out so that it does not go ballistic to the upside. They don't care. It could fall. Gold could go to $500 tomorrow. They wouldn't change the margin. They wouldn't change the margin call. Silver could fall to $3 an ounce tomorrow. They wouldn't flinch. They go, oh well, okay, cool. But when you have a situation like we had Tuesday night, where gold goes to 16.11 and silver starts staring at $19 an ounce, that gets everybody's attention. It's like, wait a minute. We didn't see that coming. We'd better plan ahead for the next time that happens, because we already know that this year is going to be a lot different. We have the mining industry, and I'd really like to get your take on what's going on. I want to keep this kind of short, Chris, as we've talked about before, but I do want to get your take on the mining collapse, or the collapse of the mining sector, as you and I both know that that's happening. I mean, we can see that happening right now. It's happening right now.
Yes.
And that is what I've been basing everything on. If you don't have any product, if you can't dig the product out of the ground, what are you going to sell? You got nothing. So what do you see as far as this year, how that's going to, because I know that you're in touch with a lot of people in the mining sector. So what are you hearing out there?
Well, I think it's a great point, because you are seeing the supply falling. Again, I get it. People have been hearing about why gold and silver should go up for the last 8-9 years. But here's an example of one of the actual tangible factors you can point to, because mines are getting shut down.
Yep.
There's a lot of these companies that, hey, with the $20, $25, $30 silver price, they have mines they'll put back into action. But Steve St. Angelo does a great job reporting on a lot of the mine closures. So you're seeing the supply actually fall. And, that's one of the things that is a bit of a floor where, again, when does that get priced into the markets? We'll find out. But I mean, there are factors that, we're not talking about Facebook stock where maybe they rehypothecate some shares and there's twice as much out there. I mean, either we stop using electronics, going green, building solar panels and using computers and cell phones, or you need more silver. And the longer the price stays down, the harder it is on these miners. Even the move from 14.5 to 18 has had a big impact for a lot of these miners and helped keeping them afloat. So, I get it. It's been a tough wait, and perhaps something maybe to help folks put it in perspective. In a sense, it makes sense that things are dragged out this long, that there is that much effort and energy to do things that I would say are felonies or clear violations of market law, because at least as far as I can see, the ability to go to Iran or send tanks here and all the nefarious things that governments do is based on printed money. So it's kind of like when the devil sees is threatened, he's going to pull out every trick in the book, whether that's raising margin requirements. Yet, just like we saw with the mortgages a decade ago, there are factors of natural earth and logic, and and in this case, that yes, someone has to go dig the metal out of the ground. You add on that the leverage just gets bigger than ever. And perhaps one thing in closing that I would leave with folks is that when I hear people say, well, maybe we'll see a slow, gradual climb, to me, it's so reminiscent of the housing market, where you sell the same piece of gold or silver 100 or 500 times. When that's resolved, you've set the conditions for the short squeeze of a lifetime. And the longer it's dragged out, that also means that when it is resolved, the higher it's going to go, which again is why I left Wall Street to study gold and silver, to talk about gold and silver, because I get it. It's been a challenge and an exercise in patience. Yet, to me, I don't think we're looking at when this, if the LBMA, someone wants metal and it's not there and you have a force majeure, I don't think we're talking about $22 or $23 silver, but when a Ponzi scheme blows, I think it will be similar to how we saw big dislocations back in 2008. And again, it'll happen when it happens, yet all the conditions have been put in place that I don't see another eventual outcome. So I would say I feel more confident that when that's resolved, that the move will be large, even more so than whether it happens this year or next. But when it does, I think, all those years people were waiting for the move and holding on to their gold and silver. I think it's going to be worth that patience, and hopefully that's helpful to keep in mind.
I would agree completely with that. The only thing that I question, Chris, and this is not anything on you or what you've said, it's just my view. The force majeure, I don't see that happening. I don't, because they'll rewrite the rules. We've seen that over and over and over. We just saw it. What they just do with the margin? Oh, they just changed it. Why? Because they can. Because that's how they keep the market in check. And that's what they will do if there's any hint of that type of a situation. But what will happen and what they can't control is what the front end loaders pull out of the ground, is what the mining processors are able to process out of the rock. When you start pulling metal out of rock and that starts slowing down or stopping, you got a problem. That's the bottom line. That's what we're already seeing. I mean, look at what's happening with Barrick. I mean, Barrick is just now, after 2 years of manipulation and buying, merging, doing everything that they can, they're just now getting settled to where their balance sheet is in decent shape. How long will that last? Don't know. But when you start, what we do know is, as you said, Steve St. Angelo does an incredible job of reporting on what's happening, and what he's been reporting has been ugly, absolutely ugly in the mining industry. That can't be overlooked. And you can't, and while some of these mines you'd made mention that they're in better shape and they could possibly reopen their doors, it's not like, you close a retail grocery store or something like that where everything stays in place and you go in, you turn the lights back on, and plug the cash register back in and you're back in business. Mines don't work that way. It'll take them about 2 years to get back in everything up and running properly. May not take quite that long, but it ain't going to take a week. It'll take a long time. So they're going to have to, the first thing they're going to have to do, and you can correct me if I'm wrong on any of this, but they're going to have to wait a minute to see that this price is going to hold, to see that they're actually going to be able to continue to make money, that their balance sheet is going to be okay and sustainable. They're going to have to wait for that to happen, to be confirmed. And then they're going to have to start hiring. Then they're going to have to get back in there and make those decisions about how much they're going to reopen and so forth. And I mean, if they reach these conclusions, say by the end of the first quarter of this year, by the end of March, that means that maybe at the offset they would be back in operation by the end of the third quarter of this year. I would think that would be about as quick as they could do it, and that may be.
That'd probably be even on the quick side.
Yeah, that's generous.
And you mentioned a great point in there about, again, I think if people get mining stocks and have the right mindset and perspective, it can be a great investment. Although one thing, if I could leave with folks just to keep in mind, we don't know whether it'll happen tomorrow. I think there's a good chance it'll be 2020, but at least when you're looking at some of these miners, make sure they do have a good balance sheet. So, hey, if we have $17 silver 2 years from now, make sure you're looking at companies that are able to withstand that can stay in business, because it can be a great opportunity. You just want to be careful, like in anything, what you're doing, but just having all the risks, and when you plan and structure what you're doing appropriately, you can hedge out a lot of the risk and leave yourself with a lot of upside if you can be patient on it.
Exactly. And you got to do your own due diligence, because I'm not going to do it for you.
Yeah.
I'm going to give you ideas. I'm going to point you in the direction that I'm moving, but otherwise it's, you got to do it yourself.
Although that's not entirely true, Rory, because you're bringing people on your show that are answering a lot of these questions and giving people the information. And at the same time, I do agree with what you're saying, that when we go out and learn and take ownership of our own decisions, in my experience, that's what I find is often the best way to go. But you do help give people access to the information of how to frame those things, and I appreciate that you do that.
Well, thank you. I think you are doing it as well, and I think you've got some really great guests that are coming on, and I've got some people lined up that are coming up over the next couple of weeks that are gonna hopefully shed some light on what we're talking about right now.
Well,
As far
now
as
that you're a big star on Kitco, you got the big things coming your way.
No, I don't know about all that, but
I'm glad to be on the show before it gets too big.
That ain't gonna happen. That will never happen. I haven't been invited back, so
well,
it's no. One last thing before I let you get out of here. I'm trying to keep it short, but it's not really working out too well. And that's the physical. I really like what's going on. I just wrote a piece about a week ago where I suggested, and this is what I'm doing. I'm gathering up as much physical right now as I can because of this conversation that we're having. And it may be that people want to look at items that they know or that they feel confident in. And some of the pieces that I feel extremely confident in, some of the physical gold, is like the quarter ounce American Gold Eagle. I think that that's one of the underrated coins that are out there. They over the last several years, they've had very low mintage. I've been following that coin. I've been acquiring that coin for that reason, and I think that because of the low mintage, I think that inherently is going to build a premium in it, as well as the fact that what we've been talking about for the past 20 minutes or so, is gold and silver going higher. Okay. And the silver coins that I really like are the Perth Mint, the Lunar Series Mint, those coins, the koalas, the kooks. I was looking at those, and I started collecting the kooks in 2010. That was the last year that the kookaburras were minted at 300,000 units instead of 500,000. They went to 500,000 in 2011. And that 200,000 unit reduction currently makes a $10 per coin premium of the 2010 and the 2011. The 2010s are at $60 right now each, and the 2011s are at $50. That's if you buy one. If you buy multiples, of course, they get a little bit less, but you're still talking about a $10 premium or $10 difference. So, what are your thoughts on my approach and my suggestion that people look at acquiring today? Because I think that by the end of this year, things are going to look a lot different.
I think the most important thing for folks to keep in mind is, much like anything in life, is to go out there, get as much information, learn what you can, and also it's okay to be comfortable doing what feels right to you. You're not what feels right to me or to Rory. We can offer our experience. Obviously, if you have $2 million versus $10,000, that's probably going to skew things. Um, in terms of, for a lot of the people that are just getting started, often want to just get the most silver or gold for the amount of money they're investing. I have my bag here of junk silver coins, which
there is no such thing as junk silver.
A lot of people like these. I mean, they're easily recognizable, where pretty much if you go anywhere with a 1963 quarter, people can understand it's a quarter.
Yep.
Now, some aren't going to know that there's actually silver in there. But, if you want to be able to barter, if you want to go, I mean, who knows what the world looks like when this shakes out. I tend to think there's actually a lot more positive that can come out of this than some other folks, and we'll see. But, if we are, going using silver to buy bread or food for our family, maybe having the smaller recognizable coins is better than 1,000-ounce block. Now, if you have $10 million and you're trying to load up, then yeah, you're probably not going to sit there with all of it in dimes and quarters, and things are rolling around your house, and your dog's chasing after them. So if people have any particular questions on products, you're welcome to email me at chris@arcadiaeconomics.com, and I can answer what I can or direct you. Fortunate I have some different bullion dealers that come on the show and are experts at that. I mean, there's the whole numismatic as well, which gets into the collectibles. The last I heard, I believe the premiums are still pretty low on those. So, if you have a dislocation, yeah, I would think the premiums would go up. But again, that's, a different thing that someone who's, if you're really interested in understanding that, then you're naturally going to be more well suited for that. But I think there's also something to, if you had $10,000 or $20,000, get some cheap products, but buy one or two Eagles, buy one or two numismatics. So, all right, if you pay an extra $5 on a coin or two here or there, you're not really blowing out your budget. Yet I think that's what's beautiful about gold and silver. One of the things where, when you actually hold it and see it, just seeing different things that are out there, going to a coin shop, seeing what you like and what resonates with you more so than anyone else. In the end, if you go someplace where you're dealing with trustworthy people and you're getting metal, physical silver and gold, not chocolate or tungsten inside, that's the most important thing. And have fun with it. There's so much worrying around this topic, which I get, and I've spent plenty of time doing, but I think anything, you find a little enjoyment out of it. That's really probably the best way to learn. And, again, if anyone has questions, you can reach me at Chris@Arcadia Economics, and do respond. Sometimes takes me a little while, but really do want to share what I've been fortunate to learn to help people in whatever way I can, and and in the end, follow what feels right to you, not me or anybody else.
I agree, and thank you very much for that. The point that I was trying to make, though, Chris, is to kind of plant the seed that by the end of this year, I think that as we started this conversation out, that I personally believe that gold and silver are going to be a lot higher than where they are today. Where they're going to be, I don't know. They could be a lot lower. I don't know. But the bet that I'm making right now, and this is just my bet, not yours, not anybody else's, and I'm not suggesting that anybody do this, but I'm looking at it in that over the course of the next few weeks, I want to get the bulk of what I'm going to get for this year. And I've never done that before. I've been a big advocate of dollar cost averaging and still believe that. I believe in that program. I'm a little concerned though right now. That's what I'm talking about is I'm voicing my concern over from what I see, from everything that we have just been discussing, from the mining industry to these situations like what happened in Iran, all of these things, the economy that is a total scam and a sham, and anybody paying attention knows that. I mean, all of these things it seems like they're on the precipice right now, and it feels like there's a lot of nervous energy out there. Maybe wrong, maybe misreading it, but that's what it seems like, and that's what I'm responding to. That's what I'm betting on. And if and it's not, at the end of the day, it's not going to hurt me, because an ounce of silver today will still be an ounce of silver at the end of the year, and whatever fiat currency that I trade for it, well, that's neither here nor there. I mean, at the end of the day, it doesn't matter to me. I mean, of course, I want to keep as much powder dry as possible, and I want to get as much bang for my buck as possible. However, if I can place a bet today that saves me 15%, 20%, or more by the end of the year, then I'm willing to place that bet. I know, or I don't know, but I believe in my heart of hearts that I'm not going to lose that much if it goes down. Is it going to go down 20% from here? Probably not. Is it going to go down 15% from here? Probably not. 10%? Maybe. But it's going to come back from that. So I'm not really that worried about it.
Yeah, and I think that's a great point. If someone's worried, if I buy the silver today and it goes down to 16 or 17 bucks, I think perhaps I would approach it differently, where we don't know the timing yet. To me, the skew where, all right, if I buy it, but my goal isn't to sell it next month. If I'm looking for insurance against a financial system that is already on fire, we're not hypothetical anymore. They put 400 billion or whatever amount it is,
413 billion.
And no end in sight. And all I can share is that after a decade on Wall Street, a decade studying the metals since then, I know there's a lot of people out there that have vested interest. All I can say is I didn't, leave to go try and convince anyone else. I left because this was the most glaring anomaly I've seen in my entire financial career. And I think when you have the right perspective, I think it's a great opportunity if you're able to sit there and say, all right, whether it's a year or 2 or 5 years, but you see all the factors that are there as clearly. Just go watch The Big Short again and look at why they knew it was going to happen.
Right.
Yeah, they had to eat a little pressure and stress along the way, but all the conditions are the same way, and if you to me, it's like maybe it goes down 16 or 17 bucks. If that happened, that would really hurt the silver supply, at least from the primary miners, versus what is a true fair value of silver. I've spent the past decade studying why it came down from $49, and I can't find any other reason aside from a bunch of bankers that were committing felonies, hammered the price. So I've always seen that as a floor. So if you look at the skew there, to me, it's a worthwhile thing. And if you can be patient, you let that work to your favor.
There you go. I like it. Well, we could get into a whole lot of other aspects of it, because this is a great conversation, and I really look forward to us taking it to another level, to the next level in our next conversation, and doing this again, which hopefully won't be but 2 or 3 weeks like the last time. But I'm looking forward to it. Thank you so much, Chris, for all your time today. You can find Chris over at ArcadiaEconomics.com. You can come visit me over at thedailycoin.org. Chris, thank you so much, and we'll talk with you soon.
Thank you, Roy. Appreciate it.